It's easy to forget that what goes up can also go down when the market is doing well. But slowdowns in the economy tend to happen in cycles. This means that another recession is likely to happen in the future. No matter how close it is or how far away it is, it's smart to get ready for it. This way, you won't be part of the panicked rush to sell stocks and buy cash. Instead, you'll remember that stocks can do well even during a recession, you just need to know which ones. A financial advisor could help you come up with a way to invest that won't lose money during a recession. In this video, we will tell you the 5 things to put your money into when the economy is bad. Number 1. Look for stocks in core sectors. During a recession, you might feel like giving up on stocks, but experts say you shouldn't do that. When the rest of the economy isn't doing well, there are usually a few areas that keep going strong and give investors steady returns. So, if you want to protect yourself in part with stocks during a recession, think about investing in the healthcare, utilities, and consumer goods sectors. No matter how the economy is doing, people will still spend money on medical care, household items, electricity, and food. Because of this, these stocks tend to do well when the market is down, and underperform during booms. Number 2. Pay attention to stocks with steady dividends. Buying dividend stocks can be a great way to make money without having to do anything. Some experts say it's a good idea to look for companies with low debt-to-equity ratios and strong balance sheets when comparing dividend stocks. If you don't know where to start, dividend aristocrats might be a good place to look. These are companies whose dividend payments have gone up for at least 25 years in a row. Number 3. Consider buying real estate. The 2008 housing market collapse was a nightmare for homeowners. However, it turned out to be a boon for some real estate investors. When a recession hits and home values drop, it may be a buying opportunity for investment properties. If you can rent out a property to a reliable tenant, you'll have a steady stream of income while you ride out the recession. Once real estate values start to rise again, you can sell at a profit. Number 4. Purchase precious metal investments. Precious metals, like gold or silver, tend to perform well during market slowdowns. But since the demand for these kinds of commodities often increases during recessions, their prices usually go up too. You can invest in precious metals in a few different ways. The most straightforward route is buying coins or bars from a seller or coin dealer. While this is different than buying a security, it's technically as good as any other option. If you're more interested in buying precious metal securities, turn your attention to ETFs. These funds are collections of investments within a single industry, which, in this case, is the precious metal market. You could also purchase a gold IRA if you're saving specifically for retirement. Number 5. Invest in yourself. If you lose your job and income during a recession, you can rebound by investing in yourself. You could go back to school to gain additional knowledge or skills that could help you get a better job. Paying down debt is another option if you worry that your job situation might go south at some point. The less money you have to spend on bills, the less stressed you'll feel during an economic crisis. If you're investing for the long term, a looming recession shouldn't panic you. You may want to offload some investments to take some profits off the table. But for the most part, your strategy should not be to sell when prices are low. You may think you'll get back in when prices have stopped falling, but it's impossible to call a bottom until it has passed. That's all for today. I hope you liked the video. Don't forget to subscribe to the channel. See you next time.